Good morning. Today is Thursday, January the 5th. The time right now in Singapore is 10:28 in the morning, and overnight on Wall Street, there's hardly any major move. The market was waiting to see the minutes of the FOMC meeting, which was last held in December last month. And there was no surprise there, although the market still wants to know what are the various voting members going to do about what is their outlook for interest rates. And it does come to the conclusion that the Federal Reserve is likely to continue to hike rates and is very likely to do so with a 50 basis point rate hike come February, which is the first FOMC meeting for 2023. So by and large, there was nothing to excite the market overnight, and the market was basically sidelining, although the Dow Jones itself has notched a marginal high relatively for the week itself at 33,409, and that was it. The market didn't go any much higher or lower, so it was just stuck there. Okay, so the S&P 500 also did a rebound, but it wasn't that sharp. There was no new marginal high, unlike the Dow Jones for the week itself. So right now we are still hanging on, waiting for a direction, and most likely the one catalyst that will keep the market into high gear is going to be the non-farm payroll, which is due out tomorrow at 9:30 p.m. So do look out for the labor job numbers to provide some kind of fireworks, so to say. Okay, over in the Nasdaq itself, obviously the market did not rebound at all. Obviously this market is, like I always mentioned, the weakest link among the three major equity index, and it does look like it is getting ready to trade to the downside anytime. Okay, so do keep a bearish posture for this particular index over here. Over in Asia, we saw a different kind of sentiment. The Hang Seng market has been on a tear. We can see this morning the market went up to a high of 21,000, almost 400, and this is the highest in 3 months since the market bottomed out at 14,597. Okay, so this is of course on the basis that China has opened up its border. They have to do away with the zero COVID policies, and the market is expecting consumers to come back and spend, and of course Chinese factories to resume production. So that is underpinning the Hong Kong market, which actually rubbed off also in the mainland. So by and large, we can say that the market has already taken the August high of last year. So now market is gunning for the June high of last year. This is the June high at 22,449. So can it get there? I think based on the current sentiment, it does look like it may have enough momentum to go and test these 22,449 levels. Okay, so in the meantime, let's watch what else can happen. Over in Shanghai, we also saw that bullish sentiment spilling over, and it has actually taken out what would have been a three-wave rally equality move somewhere around 3,120, but the market right now is trading at 3,143. So it does has that possibility of extending higher, and maybe over time it may even challenge the last month high of 3,225. Now, based on what we've seen so far, this market does not have the same kind of bullish sentiment relative to the Hang Seng, so we have to take it with a pinch of salt, see how far this market can actually go. Okay, but by and large, you can see this market is still very bearish in posture. Over in the Nikkei, we have a different thing altogether. The Nikkei is actually dying. The market has been going down very aggressively, largely due to the idea that the Bank of Japan may actually allow interest rates to go higher. So that is actually a negative for equity markets. So you can see that the Japanese equity markets is having a different fortune relative to Hang Seng. So we can see the market now, although this morning we have a bit of a rebound, but now it's coming back down again. The low traded this week so far is 25,661, which is not very far away from the last year low of 25,520. Okay, so we does not have a lot of room to wriggle. If the market do take out the 25,520, the market is slack to even accelerate to the downside. Now, over in currency, we can see that the dollar actually have a bit of a rebound last night from 129.50 in the dollar yen to all the way to 132.71. This is also very interesting because the market right now is where it is actually at the 50% retracement mark. Okay, sorry, this is a 61 61.8% retracement mark at 132.71. Okay, I am going to go in right after this recording. I'm going to go in and see if I can place an order to sell at 132 half, because I forgot to place an order as the market was going up. So this morning when I saw this price, I said, oh well, some do get away, and hopefully the market can actually rebound marginally. Currently market is at 132.08. Okay, so if I put an order at 132, maybe 30 to 50 levels, hopefully I get a chance to get filled, because I do see that this is a major bear market here right now. Okay, in the day time frame, ever since market take up 130.39, the market is already primed for lower prices. So there could be further losses ahead in dollar versus the yen. Now over in the sterling, the market did not do very much. Market hit an initial target of 119, okay, which was my original primary target as the market was going down. And now currently the price is near to 120.60 levels. Okay, sorry, 120.50 levels. And what do I think? I think the market may actually unravel to the downside, because I have another target of 118, which is ultimately where I think the market is going to head to. So if we see further losses later in the day, I think 118 is a possibility here. Over in Euro, we saw the market actually melt down in the early part of the week from 107 all the way down to 105.20. And we also saw a very robust rebound back to 106.35, which is actually the 61.8% retracement. I've actually on the way down, before the market actually slammed down, I was actually short at 106.78, and I did not do anything. Now the market has rebound, I take the opportunity to reposition new shorts in the market. I actually short at 106.10. Okay, so the market went up to 106.35. Was a bit of an overshot, but now it is below my selling price. So again, I have two short position, and my target is primarily one initial target is at 104, and the other one is 102, 40, 45 levels. Okay, so I have two targets here in which I want to go for. Okay, so far it is looking to be pretty good. And Aussie dollars, I actually was talking to you yesterday that there's a possibility the market may challenge the December high of 0.6893. And it came close. Market came to 0.6886. Okay, I've actually placed an order to sell at 0.6880, and this order was actually filled near the very top itself. So you can see the price now is pulling back to 0.6813. So if this outlook is correct, I think we may see further losses. The key will be to look out for all these levels here. Okay, if the market can take out these intermediate low levels, it just confirms that this view that the market may actually trade to the downside is going to be valid. And my target for this one is at 0.66 cents. Okay, so 66 cents is my initial target for this entire move here. Over in dollar Canadian, it was a bit of a surprise. The market pulled back a lot deeper than I expected. I did not expect the market to go down to as low as this, but still it did not quite damage the entire structure here. Overall, we can see that the dollar versus Canadian does appear to be wanting to go up. So again, we will have to see. This is a three-way pullback. Right now, we could be seeing equality move here now. Now, if this is just a simple pullback, okay, which is in line with a three-wave character, then I think the market has already, or more or less very close to a target of anywhere between this area here, which is about 134 to 134.65. If the market go down, this will be a great price bracket to actually pick up some long position for the extension of this rally here. Okay, so do look out for the possibility that this could be a buying opportunity. Over in crude oil, this is again another surprise. I did not expect crude oil prices to unravel all the way to $70, $72.73. Actually, at $76, I start picking up long positions, and apparently there was not opportune because the market continued to slide to $72.73. But I still do maintain a relatively bullish outlook for these energy prices, because unless this support line is taken out, there's a good chance market may drift lower to test this support line here. So over the medium to long term, I do expect energy prices to stabilize and then to kick into higher gear. Okay. Over in gold, we continue to see strength in gold market. Going into yesterday's market, I was actually short the gold because the previous high here was $1,850. Actually, I went short at $1,835. Hoping to no, not $35, yeah, $45, hoping to see the a pullback, but I was taken out as a market rally to $1,865. So I took a small loss here, but nonetheless, it's not a big deal because I only do half my regular size as I'm doing counter trend in an obviously very bullish market. So that trade did not pan out well for me, but again, I'm looking for another opportunity. If I cannot uh, right now, I'm just basically looking for signs the market can actually weaken because I do have this idea that the dollar strength may come back, and if that's the case, then precious metal prices would actually come back down because these two are actually negatively correlated. So if in the absence of a very clear bullishness in the dollar, maybe for the time being we can see precious metal as a whole continue to trade higher. Okay, so far this morning we have a high. Last night we have a high of $1,865.15. This morning is just trading around $1,855 thereabout. So we will see what happens as the non-farm payroll number is released tonight, tomorrow night. Okay. And over in silver, unlike gold prices, which has been relatively firm, silver saw a pullback from $24.55 all the way down to $23.59. This is a good development, but it is still not low enough to make it worth my while to consider going back in to buy. Ideally, I would like to see silver prices nearer to $23 because that on the risk-reward ratio does give me a better entry price. But again, it may not come. Okay, so we'll have to watch what happens in the silver market. Over in the cryptocurrency space, we do see a bit of activity. Bitcoin this morning actually was kicked up near to 17,000, but not quite. Okay, it went up to 16,996 and then stalled. Okay, and the market price come back down to 16,800 levels. Now you can see that previously at 17,000, it does provide a barrier to higher prices. Now, even if the market take out 17,053, which is the high middle of on December the 20th, this price bracket here do provide some kind of a challenge of anything between 17,115 to 17,325. Thus, looks like technically an area in which selling interest may re-emerge. So do watch out for a very limited upside. I think the bias is to the downside. Now, having said that, Ethereum prices has actually kicked higher, as high as $1,270 overnight. And this is actually quite good because actually I have already went short the Ethereum around the 1,250 levels. Okay, and the market went up even higher. I took up another short position at $1,260. So now I have two short position Ethereum. Now, mind you, I have not ventured into the crypto space for more than half a year, about 5 months thereabout. But you see, this is a three-wave rebound. Technically, it is corrective in nature, and because of the big slide that we saw prior to this rebound, the market bias is to the downside. I do hope that this view is going to be correct, and if I'm right, there is always a chance the market will go back and challenge the $1,151 over time. Okay, so this is my outlook here. Over in Ripple, there's hardly any move within the last 24 hours after the market kicked up from near 30 cents all the way to 35 cents, and now it has stopped around the 34 cents level. So if the market can drift lower into this bracket of prices, ideally within the $32.50, 32 cents to the 34 cents, I think that will be a great area to pick up some long position. But then again, considering that the upside potential could be limited by this resistance line here, so if you have to go long, you will probably have to put your stop below the 30 cents level. So based on reward and risk ratio, it doesn't quite make sense. So probably even if the market goes into this bracket of prices, I probably will not do anything because the risk reward just does not look right to me. Okay. Over at Binance Coin, we see the market actually went higher to $261 this morning. Again, the structure here looks three-wave in nature, and at the very most, I think the market can go as high as 271 to 280. That is about it. Okay, I think the upside potential is not great, so I'm not going to do anything like chasing this market higher. Okay, Dogecoin, of course, is not something that you want to do for the time being. There's simply no fundamental behind it. and it does looks to be very tentative in terms of its uptick here. So upside is really, really limited here. Now, Cardano actually managed to go even higher to 27 cents, but you can notice that this 27 cents coming out from a low of 24 cents is actually kept at 271, which was the previous high on December 18. So upside, we can say that this is actually a rebound, and this is the first significant top here. And because prior to this rebound, we can say that this market actually have a very, very sharp downturn. So the bias is still to the downside. So the market cannot convincingly take out 271. I think the market may be primed to trade lower to eventually take out the 24 cents level. Okay. Solana actually is one of the brightest stuff this month. From a low of near $8, it kicked up to $14.22 and then stopped. Because of the very aggressive nature of this run up, it does give idea to the maybe perhaps this token here may have already bottomed, and if the market can drift lower, maybe this is calling for the chance to actually look for a buying opportunity. But look at the structure. The fact the market comes immediately here does not offer us a safe entry level. Ideally, we want to see a three-way pullback, so maybe a rebound, and then you can at least use the most recent low here as your level to put a stop loss. So for our time being, maybe just continue to monitor this particular token and see what they want to do. Okay. So for our time being, this is all I have for you for today. Do look out for tomorrow's FOMC meeting. That should be the spark that caused volatility to come back, rolling back tomorrow. Okay. In the meantime, take care. I'll see you tomorrow. Bye bye.